Good day traders, and welcome back to another weekly market update video with me, Zane Vauda, your analyst here at Owenda Prop Trader. Markets are bracing for quite an intriguing week ahead, and a lot of this stems from the address we heard by Federal Reserve Chair Jerome Powell at the Jackson Hole Symposium on Friday last week, where the Federal Reserve Chair hinted at the potential for rate cuts sooner rather than later. And a lot of this obviously has already been priced in by market participants, as we're seeing on the LSEG terminal. Markets are now pricing in around 2 more 25 basis point cuts before the end of 2025. That will bring it to a total of 50 basis points of cuts for this year. Obviously, looking at the September meeting now, when markets are pricing in around a 90% probability of a rate cut. This obviously up from the 75% we saw, or 75% probability ahead of Fed Chair Powell's speech at the Jackson Hole Symposium. With that in mind, obviously we saw quite a significant rally for risk assets. The S&P 500, Dow Jones, the Nasdaq, all of them rising last week on Friday quite significantly. Gold prices also getting a bit of a boost there on the back of a weaker US dollar. Now the US dollar itself and the dollar index sliding quite a bit on Friday. We are seeing a slight recovery today. Risk assets obviously falling slightly in early trade, and then we are seeing a slight bounce for the US dollar. However, as things stand at the moment, it's going to be intriguing to see how this plays out for the rest of the week. Will risk assets be able to build on the gains that they made on Friday, or will we see a deeper correction? Now, beyond that, obviously, we do have some key data releases this week. One that will be really key will be the US PCE data out from the US on Friday. Now, that is the Fed's preferred gauge of inflation. So it'll be interesting to see once that meeting has wrapped and what the number is there, whether that has any major impact on the rate cut expectations moving forward. And that obviously could stoke some volatility. Looking at Asia, we do have Japanese inflation numbers as well, which could give us further insights into when the Bank of Japan might start hiking interest rates on their side, completely the opposite to what we're looking at for the Federal Reserve. But for now, guys, trade safe. I hope to catch you guys with another market update next week. Have a good one.